Okay, let's answer your questions now. First up, Carrie, is for you from Yash in Boonton, New Jersey. American Express. What do you think about it now, Carrie? Is it a buy?
Yeah, we think it's a buy. This is a company that benefits from consumers traveling on vacations. It'll be business travel soon, higher interest rates. The market was expecting somewhat better numbers than they guided toward. We still like the stock here, and it's a discount to the market.
Okay, Jimmy Lebenthal, Cleveland Cliffs. That's what John wants to know about in Connecticut. What do you tell him?
Yeah, hey, John, they reported earnings yesterday. Excellent earnings. I had the opportunity to talk to the CEO, Lorenzo Goncalves. This is a fellow who should be on every investor's tongue. I think they're going to write a Harvard business case study about this eventually. He cares about the environment. He cares about his employees. Most importantly, he cares about generating cash flow. He raised guidance for the second time this year. They're going to end the year with their leverage ratio at 1.0, and then they're going to go even lower. The point being is that us as shareholders are going to benefit from more and more of the earnings stream. I previously said I might sell this in the 25 range. Nope. I'm going to hang on to it. We're going to be talking about this for the next year. I'm going to be talking about Cleveland Cliffs going above 25.
All right, stock's pushing a 2% gain on the day, a little bit above that right now, rising as you were talking about it. All right, John Najarian, Doug in Troy, New York, good question for you. He's looking for a point to trim some shares of Snap, okay? Says he bought all of his stock at $13.56 about a year ago, and he's looking to take some profits now. What do you have an idea in your head, John, as to what a good price would be to take some profits?
Well, Scott, with you, I think 2 or 3 weeks ago, we were buying the stock because of unusual activity when it was 52. It ran into the 60s, Scott, and then pulled back and ran again into the 60s after that great report last night. But it has been selling off virtually throughout the day. Take out the first half hour of trade, and it's straight down to about this 57.50 level. So my position is all gone now. But obviously, this investor is a lot smarter than me because I didn't own it from 13 all the way up into the 60s. So kudos to you. I think right around the 56 level is where it finds major support. I love it going forward. I'm going to probably re-enter myself right around between 56 and 57.5 as far as I'll set myself up with a call spread there, Scott. But that's a heck of a nice trade by this investor.
Yeah. All right. Well, maybe don't take any profits then. It sounds like what you might be saying, but I appreciate that.
I just write calls into it.
We'll see.
Exactly.
Yeah. All right. Good advice. And lastly, it's for Rob. This one's for you from Margaret in Tucson. Says she wants to maintain a limited presence in financials in her Roth IRA. What do you recommend, J.P. Morgan or Morgan Stanley or both?
Well, you know, Scott, I like both, but we only own one, and we own J.P. Morgan. It's the best diversified revenue stream in the banking sector. Does have some difficult comps going forward, but with interest rates rising and enhanced profitability from that and lower credit costs, you know, I would say that plus fees equals J.P. Morgan in a Roth IRA.